Hello viewers and welcome back to Dukascopy TV HQ. Now for those of you looking ahead to see what your portfolio might hold for 2014, I'm joined now by François Savary of REYL CIE to discuss this a little bit more in depth. François, thank you very much for coming in today.
Thank you for having me.
Okay, now before we get to 2014, let's look at some of the clear investment trends for 2013. And similarly, are you expecting Q4 to be much of the same?
I would say yes. Obviously, when you see how Q4 is unfolding, clearly there is again an interest for equity. 2013 is really about going back into equities. After 4 years during which investors were doubtful about the interest of equities in a portfolio, you can see that in 2013 you have a lot of flows coming into equities, out of bonds. It's clearly the trend, and Q4 is no different for the time being.
Now, obviously, one of the big drivers for 2014 is going to be that US tapering. How do your tapering forecast line up with your expectations for investor sentiment? And also, similarly, I'd like to know, what are you anticipating here for US Treasuries? Historically, a safe haven asset, but one of the big stories for 2013 as an underperformer.
I think that Treasuries will remain an underperformer in 2014. We stick with the idea that the Fed is going to taper in January, despite the fact that recently Mrs. Yellen has said that the monetary policy will remain very accommodative in the US. The fact that they are going to taper does not change the course of monetary policy, which will remain very accommodative even if they are tapering. So I believe that equities are going to remain the asset of choice for 2014, but be careful. It can be a bumpy road. It's not going to be a linear road to the upside. You will have some bump coming in 2014, and the speed and when they do taper will have a significant impact on the volatility on equity market to our point of view.
And what about other underperformers that we've seen so far? Can we expect a 2014 rebound, say, for emerging markets or for gold, for example?
I have a lot of doubt about gold in the short run. I believe that the blow was so big in 2013 that you need to have a stabilization phase before you can really have gold push up again in the coming 18 to 24 months. But I would say that in the short run, no. Gold, to my point of view, has no real interest in an investment policy. It's different for emerging equities. I believe that emerging assets suffer much too much in 2013. We had recent developments that are quite interesting, especially what is happening in China, with the third plenum coming with significant decision to go for more market forces in the Chinese economy. I believe that Chinese equities have the ability to recover in 2014, yes.
Okay then, so lastly, if we're looking at how investors are looking to invest in 2014, how are you weighting your portfolio across the asset classes as a whole then?
I believe that the core of your allocation should be in equities. If you think in terms of a balance account, because it depends on the profile of the client, but if you reflect in terms of a balance account, I think that about 45% equity is the right position for 2014. You need to combine that with long-short equity product, because as I said, I believe that we have some bumps in the road upward in equities, so it can be quite attractive to combine a directional bias with long-short product in equities, in emerging equities, in US or in European equities. I still believe that you need to be significantly underweight in bonds. We have a minimum exposure in bonds close to 15%. I believe that you need to complement that with some cash and with some commodities, especially oil and industrial metal for 2014.
Equities it is then. François, thank you so much for coming in today.
You're welcome.
Well, viewers, thank you very much for watching. Goodbye for now.